Hello Forex traders, welcome to another interesting video. In today's video, I'm going to show you a simple strategy that will give you approximately around 75 to let's say 85% winning rates. Okay, so without further ado, let me give you the features of this strategy. Okay. So guys, the features of this strategy is that I call it a focused or narrow based strategy because it takes off a whole lot of variables and it helps us to focus on some few things that are necessary for us to execute the strategy properly. First thing is we will be focusing on one pair. Okay, so we don't have to be analyzing many pairs, just one pair and we are done. Second thing is it is located in the London session. Okay, so it's just the London market session that we are going to be trading. The third thing is that it is focused on a very specific time window. Okay, so from 2 a.m. to 8 a.m. All right. Then the fourth thing is that we are looking for a very specific setup, and that setup is consolidation. Okay, so we want to see the market consolidating. Then once we see that, then we begin to set our setup. It doesn't have to be broken out of the consolidation. It has to be in the window of the consolidation, all right? Or at least in the trap that we are going to be setting. I will show you what trap I'm talking about very soon, okay? So basically, these are the things that we need to know about the strategy and to be able to execute it properly. So now let's go on my dashboard and let me show you how the strategy works. So one last thing that I didn't say about the features is also that it is traded only in one time frame. Okay, so this will help us to focus on one time frame, and we know that, okay, this is the time frame that we look in. We don't look at any other time frame. You know, we don't have to do multi-timeframe analysis, see what this time frame is saying. No, you don't have to do any of that. And putting all of these things together, that is what helps to increase your winning rate because you've cut off all unnecessary variables that can distract you. All right. So now we said our time frame is 15 minutes time frame, and we will be looking for consolidation. So as we look at the markets today, there is no consolidation. If you presented yourself, you see market is going up. All right. Now, if we come on the previous day, we see that between the time frame window that we talk about, this is the time frame window. We said from 2, all right, 2 to 8. We want to see consolidation. All right, good. So where did we get a consolidation? Here. This is where everything begins to form, you see. So now here is the consolidation. All right. Now that we have the consolidation, guys, bear in mind that at this time 8 that we present ourselves in front of the market, I will say that if you can present yourself in the market a little bit before 8, 30 minutes, 1 hour before 8, it will be good. Do you understand me? It will be very, very good because the market is dynamic. I'm saying this from experience. The market is dynamic. So sometimes it may exit a little bit early. Do you understand me? So if you are there, it will be good. Sometimes too, it may exit a little bit late outside the 8. All right. Now, for the market exiting outside 8 is okay. We can wait and trade that. All right. So let's say if the market would have like exit like outside this box, like around 10, 11, we would have still trade. What I said we don't trade is we don't want to see this formation starting to form from 8 going. That one we don't trade. All right. Good. Now we see that the consolidation is 13 pips. All right. I like to round it up. So you round it to 14 pips. Okay. Then this is the profit that we are going to take. All right. That's why I talked about the hit and run. So this is the profit that we are going to take. Okay. So as much consolidation we have in this area, this is the same amount of pips we are going to take in profit. Okay. Now question is, having this, where is the market going to go, up or down? Nobody knows it. So here is where we play our smart game. So we will set this thing here, okay, this bar around this area. Then from here going, we will count 3 pips and we will set a trap. Okay, now you guys are getting the trap. So above here, we will set a buy stop, okay? And here below, now the market is below here, so we can't really do it, all right? But if the market was in here, okay, between these two gap, down here, we would have set sell stop, not buy stop, sell stop, okay? But let's assume this is a sell stop, okay? Then what is going to be the next phase? The next phase is that we will set the take profit, okay? We know how much is it. We said it's 14, so we will put it here. You just have to click on this and you will set your take profit, okay? Boom, push it a little bit up and push it a little bit low, all right? Good. All right. If you know how to count the numbers here, you just change the figures here in pips, all right? Then you are done. All right. So you modify it and you move your take profit to 14 pips. All right. 14 pips. Here we are. Good. Then your stop loss. That is what we didn't know. Now your stop loss will come exactly on this line. All right. Good. On this other setup. Okay. Then before I put it there, this setup too, you will do the same thing for this setup. So you will set 14 pips in take profit, and the stop loss for this setup, you move it right on this entry. All right. Good. This is the initial setup. All right. So now at this point, okay, if we have all of them done, both two of them set, okay. Now, if the market exits here and triggers this guy, this position, and goes into our take profit, then we are done for the day. We will come back and erase this. All right, guys, sorry for that. That was my phone. We will erase this position here because our take profit has been hit. So we come back and we erase this position and we are done for the day. All right, good. But what if the market exits here, triggers this guy, and reverses all the way here and come back and hits the stop loss? Because it's not always the market will go into this direction, right? We'll trigger this guy and go into this direction. Do you understand me? So that is why we have to prepare ourselves for any eventuality, right? So what if it triggers this guy and reverses all the way and come back and hit our stop loss? Now, this is it. The moment we see that it has hit, it has triggered either this position first, which one of the two will be triggered, either one of the two that will be triggered first, okay? We will come back and remove the one that is not triggered, okay? So for a case study, let's assume if this one was triggered first, okay? The moment we see that this guy has been triggered, we come here and we will erase this position. Then we will create this position again, but we will double the lot size. So if this position here has the lot size 0.04, okay, you see where the mouse is, 0.04, we will make this second position 0.08, which is the double of this guy. Do you understand me? Why are we doing that? So that when the market reverses, okay, and hits the stop loss and goes into the take profit of this guy here, we will be able to recover the loss that we took on this position and make a profit for the day. So that's why we double it. So one position will be to recover the loss and the other will be to make a profit for the day. So that's why we go with a double lot size. I hope it is clear. If it is not clear, guys, let me know in the comment section. All right. And I'll come in and I'll help you guys. So this is basically the setup. All right. If we lose in both two directions, we are done for the day. All right. Now, this strategy is so pathetic that, guys, it is easy to recover even your loss. All right. So that is why the winning rate is so high, together with all the advantages that I gave you, together with all the features that I gave you about this strategy. All right. Now, having described the whole strategy, so this is how the whole strategy works. All right. This is how the whole strategy works. Okay. So when you create, I don't know if I say it, but just for clarity purposes, when you create the second position here, all right, when you create the second position here with the double lot size, you will do the same setup. Your stop loss will be here and your take profit will be at the same 14 pips. All right, good. Now, when do you do that? You do that the moment this double position, you do that the moment this position has been triggered. Okay, the first position has been triggered. Now, I think we've set the strategy is quite clear. Now, let's go and look at some setups. Okay, so we've seen one here. All right, here we wouldn't trade because by the time we would have presented ourselves in front of the market, we will see the market descending. So it's not a trading day. Here it's not a trading day. Here it's not a trading day. Oh, this one is interesting. So see, boom, boom. You see, good. Now, how many pips is that? Is 14 pips. All right, guys. Now, if our consolidation is above 27 pips, we don't trade that day. Right? If it is above 27 pips, I mean this pace here, okay? If it is above 27 pips, we don't trade. Don't trade it. All right? Good. Now the reason why I'm saying don't trade it is because it's more likely that markets won't move that much. Not always. So we try to avoid those situations. So see here, you see here, you would have count from here, you would have count 3 pips here. All right? And see, good, 15 pips, easy peasy, right? Let's go back. You see this 1, 2, nice setup. All right, good. Setup would have been this. All right, good, more or less. And we would have set how much was it? I didn't count. It was 15 pips. All right, so 3 pips here, then 15, 16, 17. Bro, we would have gotten our profit. So you see, up till now, we would have made 3 profits, 0 lost. 3 profits, 0 lost. All right, good. So guys, basically that's the whole idea. Now I will say that backtest it for some like 3 years so that you too can build confidence for this strategy. All right, guys, that is all I will say about this strategy, and I hope you did enjoy this video. Practice it, and guys, come back into this video and let me know how it is working best for you. All right, I would recommend that you start trading it on a demo account. All right, that is what you should do with every strategy. Then after the demo account, then you move to a real account. Maybe you deposit a small amount of money just to make sure that you can be able to practice it and see that it's the same thing. All right, then do what you want to do with the strategy. Okay, so guys, having said that, thank you very much for your time, and I will see you in the next video. Stay blessed.